What if you could own a fraction of a New York penthouse, earn yield from US Treasuries on-chain, or invest in gold, all through crypto? This isn't sci-fi. This is the rise of real-world assets on the blockchain, and it's set to disrupt trillions in traditional finance. Welcome back to Chain Rush, where we break down the future of crypto, one trend at a time. Let's dive in. RWAs, real-world assets, are physical or traditional financial assets that are represented digitally on the blockchain. Think real estate, commodities like gold, private credit, and even government bonds. When tokenized, they become tradable, programmable, and globally accessible 24/7. Instead of needing a broker, bank, or lawyer, you could own and trade these assets with just a crypto wallet. The blockchain becomes the infrastructure for value that once lived in dusty vaults and Wall Street spreadsheets. Here's why RWAs are the next big thing in crypto. 1. Institutions are moving in. BlackRock, JP Morgan, and Franklin Templeton are actively exploring or deploying tokenized assets. 2. Yields are back. With real-world interest rates rising, protocols like Ondo Finance and Maple are tokenizing treasuries and offering on-chain yield. 3. DeFi needs new fuel. After the DeFi summer and 2022 crash, RWAs offer real-world collateral that could bring fresh TVL and stability to DeFi. Even crypto-native protocols like MakerDAO are pivoting, allocating billions into US bonds through real-world partners. It's TradFi plus DeFi, finally playing nice. Here are some names you need to watch in the RWA space. Centrifuge, tokenizing private credit and invoice financing. Ondo Finance, bridging US Treasuries to DeFi via USWISE. Goldfinch, bringing crypto credit to emerging markets. Maple Finance, institutional DeFi lending. Chainlink, powering RWA oracles and data feeds. Plus, Ethereum L2s like Base and Optimism are giving these protocols the scalability they need, while Chainlink is solving the data verification piece. But it's not all bullish vibes. RWAs come with challenges, regulatory gray zones, jurisdictional issues, and licensing. Centralization risks. Most RWA assets are still managed by real-world custodians. Smart contract risks, bugs or exploits could still affect these systems. Still, the potential outweighs the risks, and as compliance frameworks catch up, RWAs might be the bridge that brings the next billion users into crypto. RWAs are more than a buzzword, they're a paradigm shift. This is how blockchain becomes the infrastructure for everything. So tell us in the comments, what asset do you want to see tokenized first? Smash that like, tap subscribe, and ring the bell. We've got more alpha coming your way, only on Chain Rush.